Hello everyone and welcome to my morning report analysis videos on Tuesday 3rd of July with me, which market analyst at Hantec Markets. We've had an improvement in risk sentiment overnight. The issue yesterday was that, or one of the issues certainly, was that there was elevated German political risk, and that seems to have been sort of subsided somewhat after an agreement between Angela Merkel and Seehofer. German accent is terrible. Over the migrant issue, and it seems as though that his threat of resignation has been withdrawn, and that should settle down market nerves. And you can see that in how markets are moving today. Across the list, we've got the euro bouncing nicely. We've got sterling bouncing. We've got general risk appetite improved, and the safe havens of late have been the yen and the dollar, and they have basically been unwound, or they are unwinding today, and that is also allowing equity markets to bounce, and the DAX is outperforming. Interesting also that the continuation of the gold price that moves inversely to the dollar is ongoing. It's not a safe haven play at the moment. It is a play on the dollar, and dollar weakness equals gold rebound, and that's what we're seeing today. Other factors are we had the RBA decision today, early morning. Kept rates on hold as expected. They talked about inflation and unemployment moving in the direction that they wanted it to go, but still very gradual. But despite that, we have seen a nice bounce in the Aussie dollar, nicely timed with a US dollar correction. So that's helped the market higher there. So pretty much that's where we are sitting at the moment, and what we've got is not a great deal of. Let me just show you some charts actually. Not a great deal of movement other than that, but we've seen the dollar, which in the last couple of weeks has been sort of a bit choppy. A load of mixed signals really on the dollar. The oil price continues to rise, and one of the factors driving the oil price higher today is that the supply issue in Libya. They've been issued a force majeure, which is a temporary freezing of supplies, and that's helped to drive the oil price higher today. We've also got volatility on the VIX, which has just dropped back again. So it all plays into the positive risk sentiment that we've got going on today. So, in terms of data points, we're looking at the factory orders for the States. Not expected to do a great deal. Just as an aside, we've just had out the UK construction PMI, 53.1, so that's an improvement on 52.5. So that should be again playing into a little bit of sterling support. Factory orders this afternoon. Reuters has it as flat. I read other estimates saying it's estimates of plus 0.1. So an improvement slightly on the month potentially. So my chart of the day is the Kiwi dollar. Now I looked at the Kiwi dollar, and I'm sort of looking at it. Sort of looking at this Kiwi dollar, and I think it's sorry, I just haven't actually got it up there. Right, it's a D equals. Looking at the Kiwi dollar, and I think it's in this downtrend phase. It's been in this trend channel for the last sort of 2 to 3 weeks. Now, it'd be interesting to see what happens now, because we've had an improvement in risk sentiment, but if you sort of noticed on the board there, the Kiwi dollar was a little bit of an underperformer still. So the Kiwi dollar is still under pressure, and having broken below this range of support, 68.50 down to 67.80. If I expand that out, you can see 67.80 was that November low. And these were key breakdowns. These are key levels of support that have been broken on the Kiwi dollar, and it's been trending lower. And you've got the momentum indicators, which are negatively configured, just falling away. Stochastics, RSI, MACD. Now, you would in that environment, you'd certainly say that selling into strength remains the way to play. Certainly, that old support, 67.80 towards 68.50, now becomes a basis of resistance of overhead supply. All these buyers who came in November, back in May, back in June, anyone who bought there are now sitting on losses on their positions. So any sort of rebound becomes a basis of resistance for an opportunity to close out that long position. So subsequently, we would see that you've got the overhead supply of those old lows, and also the downtrend channel, which also comes in around that sort of area today as well. 68.10 is where that downtrend channel comes in today. So any sort of unwinding move on the Kiwi is still likely to flounder, I think. You've got the RSI, which is stretched, it's below 30. It could unwind a little touch, but I'd still see it as a selling opportunity. It doesn't sort of give me a great deal of confidence. You can see here on the hourly chart, it has picked up this morning though, as the risk sentiment has improved. But again, on the hourly chart, you can see how it's basically just unwinding oversold positions on the MACD, on the RSI back towards 60, and the stochastics as well. So I think this is going to be another chance to sell. You've got the initial resistance that comes in 67.35, basically around about there now, up towards 67.90, and then the overhead levels as well. So I think it's going to be really difficult for this chart to really get going in a recovery before the selling pressure comes back in. But certainly you've got a little bit of a pop to the upside today, but exactly how long it lasts, I'm not entirely convinced, because this has been a key breakdown below the major supports now on the Kiwi dollar. So I wish you good luck in your trading today, and I will speak to you later.